Hi there, etoro. Today I've got a topic that is specifically for you. So let's take a look. Right now I'm getting a question that becomes popular with copiers of my portfolio somewhere between 1 and 3 times every year. And that question is, what the hell's going on with your portfolio? Things are green or they're red. I'm losing money. I'm not making money. I had a lot of copiers join, I think, in January and February of this year. And now they're frustrated because for 2 months they haven't seen much of a gain. And I think that when looking at eToro, people compare PIs with each other. So I completely understand there are lots of very clever people making fantastic gains in eToro. And I highly recommend that you diversify your investment across PIs. Just something I would also say is when you are copying a PI, make sure that you know the reason that you're copying that person. Are they your high risk, high returns PI? Are they your slow and steady? Are they your YOLO PI? Whatever. Just so that you are setting your expectations accordingly. Anyway, so lots of people have joined the copy. The portfolio's been flat for a while. Other PIs I know are doing very, very well. Their strategies are working fantastically. And people are now asking me, Wes, what the hell, buddy? So I'm creating this video so that I can replay it for those times in the year when I start getting the question. And I'd like to talk about why this happens and why it's not really much of a concern. In previous videos, I've talked about my sub-strategies within my portfolio. I'm not going to talk through those now. So there are some strategies that are winning and others that have been delayed for whatever reasons. Please see previous videos if you want to learn more about that. Today, we're going to look at the cold, hard numbers. What I've chosen to do here is pull out my returns from June 2016 to present, as well as for the S&P 500. So these are the monthly returns. I've chosen this period because I had some months with massive gains before this, and they kind of detract from the point I'm trying to make. Something to note is that in 2018, I had my worst year in 10 years. And this is because I made some big mistakes that I learned from, and I won't be making those mistakes again. You've seen that I've highlighted some of these months in red, so S&P 500 return, where's the return? And those highlighted in red are the months where the S&P 500 beat me. And I think that something that that is frustrating copiers and investors right now is that the NASDAQ, the S&P 500, the Dow Jones, they're putting in all-time highs. And my portfolio obviously is not. So they're wondering why the hell should they be copying me when they could just go and grab an index. And indexes aren't a bad way to invest, by the way. If you don't like volatility, then I highly recommend that you use the indexes. The point that I'm trying to make, though, is if I count these months where I've lost to the S&P 500 over the preceding 4 years, you will see, I've done it for you, that I, on a monthly basis at least, only beat the S&P 500 51% of the time. However, if you chart my returns against the S&P 500, so if you'd invested $10,000 in the S&P 500 back in 2016, you would have doubled your money, which is great. But if you had invested it with me, even though I had this awful, awful year in 2018, you would have quadrupled your money. So this, I know this seems a little bit counterintuitive because I'm only beating on a monthly basis the S&P 500 by a very, very, very small margin. But when I do beat the S&P 500, I beat it by such a large amount that it means that my overall gains are outsized. And if I do zoom out, if I do include all of my returns over all time, this hasn't updated to include April, but you can see that the margin by which I beat the S&P 500 is even higher. Okay, so why does this happen? So people, investors like me, we, at least for the core part of our portfolio, we look for companies whose share price doesn't represent the true value of that company. So the stock price is less than it should be effectively. So there's been some kind of a mismatch between what the market thinks and what we think about about that. And what that means is that we buy those stocks, obviously, before the rest of the market realizes they should be much higher value, or the price should be much higher. And because we cannot time the market, we have to wait for the market to realize this. And unlike deep value investors, I don't want to buy things and wait for years for the value to be realized. Or actually, I don't mind doing that, but I want to mix my approach. So while I'm looking for value, I'm also looking for value in certain areas where there might be something that catalyzes the market, which makes the market realize we should be piling into this. We should be adding more money to it. So as an example, AMD is one excellent example, historically and also at the moment. So what I have here is the weekly chart of AMD, and I have this orange line is the S&P 500, right? So over this period, since 2017, you would have nearly doubled your money, 75% up. But if you'd invested in AMD, you would have had a 487% return, which is obviously much, much better. However, you can see here that for a long time, the S&P 500 was beating, in terms of returns, the stock price of AMD. Now, I was in AMD during this period, and it was very, very frustrating because the company was doing excellently. They were growing like crazy, but for some reason, the stock price just wouldn't move. And I know that many investors jumped out of the stock somewhere in this very frustrating journey. But if they had waited, they would have seen then in a very short period of a few months. It is a few months? Yeah, of a few months, a return of 131% on that investment. So it sucks, it's boring, and you've got to wait it out here. But suddenly, boop, and it's jumped up nicely. And suddenly you're outpacing the S&P 500 massively. Now, 2018 happened, so the stock price sold off enormously. 2018 was a bad year for stocks, by the way, the market overall. And then if we zoom in a little bit, we find many other periods where there are weeks or months where the S&P 500 and AMD are, well, S&P 500 is either beating AMD or they're very close together. The returns are fairly meager. But then once again, the company that is still fantastic, the market's like, oh, actually, this is really cheap. We better buy it. And the price is driven up again. And this repeats over and over and over again. S&P 500 beating returns for AMD, whoop, up 50% again. And if we zoom in quite a lot, so let's try and move to, I guess, just this year. Again, we see the S&P 500 is now outpacing AMD. But for anyone that saw AMD's most recent earnings, the company grew like crazy over the past quarter and then increased their forecasts of growth for the coming year. So now they're going to grow 50% over the coming year. Now, this industry has been hard hit in the past few weeks. I don't really trust why analysts are saying that. They're saying that there's concerns about supply of materials for semiconductors, but yeah, we'll see. So if you have a basket of stocks that are in the situation, they're good companies, they're growing well, they're also in high growth industries, but the stock market for some reason isn't realizing it. They're looking the other way. They're looking at something else and they aren't yet buying the stock. You found yourself a very good opportunity. The hard part about the strategy, because on the surface of it, it's very simple, right? Everyone knows you want to buy good value companies at discounts and then wait for the market to realize it, buy into them, and drive those prices up. The theory is very easy. Being patient and waiting for these multi-week and sometimes multi-month periods is actually very hard, and I think that's what lots of people are finding out at the moment. If you have a basket of these kinds of stocks, then you're not waiting weeks and weeks and months for all of them to pop, because they'll be popping at different times. And so in effect, this is a core part of my strategy. Buy these things that are cheap, wait, be bored, be frustrated, and then be very happy when they massively beat the market later on. Okay, that's it. I hope that makes sense. I hope that helps with the frustration. And I hope to see AMD and the like popping in the near future. See you soon.